There are 5 steps to creating a balance sheet. The first step is to determine the reporting date and reporting period for your balance sheet. In most cases, the reporting period is a financial quarter, and the reporting date is the last day of a particular financial quarter. The second step is to identify your assets. You'll do this line by line, starting with your current assets and then your non-current assets. Current assets include accounts receivable, cash and cash equivalents, inventory, other existing assets, and short-term marketable securities. Non-current assets include goodwill, intangible assets, long-term marketable securities, other non-current assets, and property. After you subtotal these amounts, you'll add them for a later step. The third step in creating a balance sheet is to arrange your liabilities. You'll do this line by line, starting with your current liabilities and then your non-current liabilities. Current liabilities include accounts payable, accrued expenses, the current portion of long-term debt, deferred revenue, and other current liabilities. Non-current liabilities include non-current deferred revenue, long-term debt, long-term lease obligations, and other non-current liabilities. After you subtotal these amounts, you're going to add them for a later step. The fourth step in creating a balance sheet is to calculate shareholder equity. This step can vary depending on the stock that your business issues. Typically, you'll add either common stock, preferred stock, retained earnings, or treasury stock to this balance sheet area. And finally, you'll add your total liabilities to the total of shareholder equity. This is the number you'll compare to your assets.